What is going on, YouTube? It's your boy Dollar Mike, and I'm back at it again with another video, and we're going over all the dividends that my dividend and growth portfolio paid me in the month of June of 2023. Now, the content hasn't been flowing as I want it to be, but regardless, I'm trying to keep it consistent. I got a lot of things going on in life right now, but I'm doing all I can to be the best for you guys. Either way, I'm back at it yet again. So let's talk about the dividends that I received for the month of June. Let's not waste any more time. Let's get right into the video. Let's go. Before I jump into the portfolio, I would just like to say how much this portfolio is generating for me in passive income right now. And right now, I'm getting about $1,500 every single year in passive income that continuously grows over time as I invest more money into this Robinhood dividend and growth portfolio. As you can see, $1,568.07 right now annually at the bare minimum. Like I said, I keep investing into this portfolio every single month, so the dividend income, the passive income, will continuously flow and continuously increase as we go throughout 2023 and beyond. Past that, every quarter I'm getting roughly $400 or $392.02. Every month I'm getting roughly $130. Every day I'm pretty much getting paid $4 every single day, $4.30 for doing absolutely nothing. And you can do the exact same thing if you create your own dividend portfolio. And every single hour I'm getting paid roughly 18 cents for doing absolutely nothing, just from living, being alive, walking around, doing regular stuff that everybody does, right? Either way, let's jump on over to the actual portfolio and show you guys where we're at and what dividends paid me for the month of June of 2023. Let's go and jump on over to that real quick. Face ID, and we are in. Right now, this Robinhood portfolio is sitting at over $50,000, $50,501.17. We're not here for this. You'll dive into every single stock in my portfolio in my next video, which should be coming out later today or tomorrow. But past that, let's see what dividends we got paid for June of 2023. So the first dividend that paid me for June of 2023 was on June 6th. That was for ticker symbol JEPI. That's for $18.87, and that was also reinvested back into JEPI stock. That's for holding about 51 shares of JEPI, and right now JEPI is sitting at a nice $55.45 per share. This is also a monthly paying dividend stock if you didn't know, and the dividend payment right now, or the dividend yield right now, is around about 8 to 9% for the dividend yield. So definitely higher than your CDs right now. If you want to go and invest into a CD or a high interest savings account, you're going to get a way better yield by investing into JEPI right now. Of course, you're taking more risk with your money by investing it into a stock like JEPI versus putting it into a CD or into a high yielding savings account. As you guys know, those things are backed by the government, and this is, of course, on the stock market. So completely different type of investment thing, more risk involved, but as you can see, more reward as I'm getting paid roughly 8 to 9% yield on my particular investment right here. That's across the entire year. And we go back and check out the next stock. The next stock on the list is on June 8th of 2023, and that is MSFT, or Microsoft. They paid me $4.07. Microsoft isn't one of those high-paying dividend companies. Microsoft is a growth company, and they're doing just that. The stock has been up quite a bit over the course of the first half of this year, which of course is great. And honestly, most tech stocks are up. I think Nvidia's probably up the most. I think up 164% on the year so far, which is absolutely amazing. I have Nvidia on my other portfolio, and it's killing it. Regardless, 5.9 shares of Microsoft stock right now. If we go on in, Microsoft is sitting at $340 a share. I've been consistently buying Microsoft as much as I can, especially under $300 a share, because of course it's Microsoft. I knew we were going to get back to over $300 a share. It's no question. It's just a matter of time. If we scroll down and look at the dividend yield on Microsoft stock, it's a little bit under 1%, sitting at 0.78% for the dividend yield on the year. Like I said, dividends, Microsoft, they don't really go hand in hand, but you're getting a nice growth stock. And if we go and check out Microsoft stock over the past 3 months, you can see we're up over 19% on the stock. So you're getting a solid growth stock. The dividends are just a little cherry on top, and that's completely fine. Past Microsoft, we got ticker symbol what? Ticker symbol XOM, or Exxon Mobil, on June 9th of 2023, $11.09. That's also reinvested back into Exxon stock. I have not bought any Exxon stock since I sold my original half of my position late last year or mid last year, around June or July of last year. So right now we're sitting at about 12 shares. Nothing much has changed. Exxon is sitting at about $100 a share. Don't plan on buying any more. If you want to know the dividend yield on it, right now it's sitting at about 3.37%. So you can get a higher dividend yield by just opening up a high interest savings account and putting the money in there temporarily as interest rates are just up right now, so it's a good thing to do. Or you could put it into Exxon and possibly get more growth of your money over the long term. I personally don't think that's the case for Exxon. I think Exxon will still probably fall as time goes on over the next 10 to 20 years, just because I feel as though the world's moving in a different direction, but of course we're still going to need those gas companies. So it's not like Exxon's just going to magically go away overnight. But regardless, it is a nice investment to have, and I still have my investments or my reinvestments from my dividends going into it. I just haven't put my own money into it in quite a while. Past Exxon, we got ticker symbol TGT or Target on June 12th of 2023. They paid me $6.03. Not much to say about Target right now. Just casually investing into it as time goes on. Dollar cost averaging my position, and that's pretty much the gist. 5.5 shares of Target paid me that $6.03. And we go on in, Target right now is sitting at about $132 a share. If we scroll down, Target's dividend yield right now is about 3.28%, which is fine. You can still get a better one with a high interest savings account right now, but it's fine for what it is. If you want to be invested into Target for the long term, then by all means, that's a solid bet. Past Target, we got ticker symbol WBA, which took a major hit, I think, recently because their earnings weren't as good as what they wanted them to be, of course. But either way, that is Walgreens. The ticker symbol WBA on June 12th of 2023 reinvested $24.24. So a huge dividend payout for Walgreens. I have about 50 shares of Walgreens right now, and we go on in. Walgreens is sitting at $28 a share. I do plan on buying some more at this price point. I still believe in Walgreens over my next 3 to 5 year term outlook for the stock, and I love that I can grab Walgreens under $20 right now. I think it's still a steal for the time being. Like I said, they just missed some earnings, so of course the stock price has reflected that over the past week, down about 9%. But for me, as a long-term investor, especially into Walgreens, I think over the next 3 to 5 years, I think we're okay. I could be wrong, and that's just the risk of it. That's the risk-reward play of it. I could be wrong and it could go down more, or I could be right and I make this plus some dividends on the way back up. If we scroll down on Walgreens stock, the dividend yield on Walgreens is almost at 7%, 6.74% right now on the dividend yield, which is great, of course. Definitely way higher than a high interest savings account or a CD right now, so that's solid. So you'll get some nice dividend income, but is that worth the cost when it comes down to the actual stock? If you put all your money into Walgreens stock and the stock price continues to fall, the dividend's not going to make up for it. So you need the stock price to go up, and you casually still want the dividends to go in as well. So we'll see how Walgreens turns out over the next, I would say, 1 to 3 years, and then 3 to 5. But for me personally, I'm still investing into Walgreens. I'm definitely buying more under that $30 threshold right now. Past Walgreens stock, we have ticker symbol DGRO, and that was on June 13th of 2023 for $37.57. One of the largest dividend payouts for the month. And if you guys don't know, I think I have 14 stocks paying me for the month of June, which is amazing. We love that passive income. Right now for DGRO, I have 144 shares of them with plans to buy even more. Absolutely, of course, you guys know the deal. DGRO is a dividend and growth ETF, so it's the exact staple of what I want my portfolio to be. Right now it's sitting at $51.51 a share. If we scroll on down, the dividend yield on DGRO is about 3%, 2.57% right now. So not as good as a high interest savings account, but for the quality of stocks that are in here and for the type of portfolio that I'm going for, in particular for this portfolio, this is perfectly fine with me, and I'm very happy with where we're at right now. Of course, I want DGRO to grow in value, which I think it will in time as the stock price just naturally goes up over the next 5 to 10 years. Past DGRO, we got ticker symbol MAIN or Main Street Capital. This is a monthly paying dividend stock. This is on June 15th of 2023. They paid me $9.17, and that's for holding about 40 shares of Main Street Capital. If we go on in, Main Street Capital stock is sitting at about $40 per share, and we scroll on down, it's at 6.58 for the dividend yield right now, so well above CD, high interest savings account, so that's good. I think this is honestly one of the safest plays. I've been investing into Main Street Capital for some time now. I absolutely love it. They've been able to hold their dividends strong. The stock price hasn't increased that much in value. I think when I originally bought it, it was around $36, and now it's sitting around $40. So the stock price hasn't increased that much in value, but the dividend yield has stayed true to what they are, a high paying dividend yield. This is also a monthly paying dividend stock, as I mentioned before. So you're getting a lot of value when it comes to passive income from this particular stock. And I've been invested into Main Street Capital for almost 2 years now. So I'm just saying, I'm proof. I'm putting the proof in the pudding, whatever you want to call it. Either way, I think it's a good value investment or a good dividend investment for those people that are just looking for high-paying dividend stocks that aren't ridiculously high-paying. They can afford to pay this stock, and you'll be all good to go. So if you're looking for that, you don't want to invest into a high-interest savings account, and you also don't want to take on too much risk, I think Main Street Capital might be one of the best bets to pick right now. Of course, there are others on the stock market. I don't know of them, but if you do, let me know down in the comment section below, and we can talk about it. Past Main Street Capital, though, what do we got? We got ticker symbol STAG, Stag Industrial, which also paid me on June 15th of 2023, $7.13. If we go on in, that's for holding about 58 shares of Stag Industrial. Stag Industrial right now sitting at about $35 per share. I'm waiting for more growth with this company, more growth and stock price, and also more growth in the dividends. So we'll see how things play out throughout the rest of this year and next year. But if we scroll down, we're at about a 4% dividend yield right now, which is fine, nothing crazy. That's about in line with with most high interest savings accounts right now, so that's fine. And I'll take it. I'll take the risk reward ratio for this one. I still believe in Stag. I like the industrial real estate that they invest into. So we'll see how things play out, and I'll continuously buy a little bit more Stag as time goes on. Past Stag, we got ticker symbol O. They also invest into real estate, but instead of industrial, they invest into commercial real estate. So they're also going to pay me on June 15th of 2023 for $4.51. That's for holding about 17 shares of Realty Income, or O. And we go on in, O stock is down a little bit to about $59 per share. Now, O hasn't been under $50 or $60 per share in quite some time, so I think it's honestly a good time to buy some O in my personal opinion. So I will be picking some more up under $60 a share, and if it drops below that, then of course even more. If we scroll on down on O, the dividend yield right now is about 5%, which is great. Love to see it higher than those interest rates right now, or higher than those high interest savings accounts and most CDs right now. So I'll take my risk reward on this one for sure. This is also a monthly paying dividend stock, and a lot of people like this stock. Just saying, just putting that out there. This is one of the staples of a dividend portfolio. In most cases, people just generally cling to this, and they can afford to pay their dividend out as well, which of course is a win-win. Past ticker symbol O, we have ticker symbol what? Ticker symbol WM, or Waste Management. On June 16th of 2023, they paid me $4.20, and that's for holding about 6 shares of Waste Management. I do plan on investing more into Waste Management. They simply handle the trash. That's as basic as we can get for the time that I want to spend making this video and the time I know you want to spend watching this video. Either way, they're sitting right now at $172 per share. If we scroll down on Waste Management, the dividend yield isn't high at all. It's a very basic, it's very fine. It's not like it's low. It's 1.56% right now. It's not like it's the worst dividend yield in the world. It's definitely not the best, but like I said, this is also one of those growth companies. I'm not really looking for Waste Management to provide a high dividend to me, but by all means, I'll take a dividend if they're going to pay it to me. And they make more than enough money to pay this 1.56% dividend yield out to me, so I can't complain with it. So we're going to continue on. Past Waste Management, we got ticker symbol PSEC, or PSEC, or Prospect Capital. This is on June 21st of 2023, and they paid me $7.15. That's for holding about 119 shares. I have not invested into PSEC since I originally started buying it in my portfolio about 3 years ago. And right now they're sitting at about $6.22 a share right now, $6.22, by the way. If Robinhood's acting funny, I'm sorry. For whatever reason, when I record these dividend videos, the Robinhood app freezes up while I'm recording it. So going forward, hopefully I'll get a better system or something like that going. Maybe I'll do like an overhead type of view so you can always see what I'm doing on my screen. That might be pretty cool, but it might, we'll figure it out. Either way, we scroll down. The dividend yield on PSEC, or Prospect Capital, right now is about 11%, one of the highest paying dividend yield stocks in my portfolio. Actually, it might be my highest paying dividend yield stock. Either way, they've been paying this dividend out to me since I've been invested into them. I think when I first started investing into them, it was about an 8% dividend yield. Then I think it went up to 9, then up to 11, then down to 10, then fluctuating around 10 to 11, I would say right now. But right now it's at 11.61%, which is absolutely phenomenal. They've been very consistent about paying it out. I haven't had any issues. I've been investing into them for over 2 years. Nothing to complain about at all. I don't have any of this reinvested back into PSEC stock because I got in at a pretty good time. I got in around $3-4 a share. So I'm just holding on to the little bit that I have. Nothing crazy here. If they end up cutting their dividend whatsoever, I'll end up selling the stock most likely and just putting the money somewhere else. This $700 doesn't really make or break the portfolio, as you can see, so it's not really that big a deal, but I'll casually collect that $7 every single month if it's free. Why not? So past that, I believe that is all the stocks. Nope, it's not. I got what, how many more? Okay, I got like 3 more. I got like 3 more, so we're going to run through them since I already showed you anyway. Main Street Capital paid us again on June 28th of 2023 for $9.22. Some of these stocks like Main Street Capital and Prospect Capital, the type of, what is it called? The type of business, a business development company, those type of companies sometimes pay you a special dividend maybe once or twice a year depending on how much money they've made. So they paid me $9.22 for on July 28th as well. So that's great to see. SCHD and XLP are both ETFs. One is a dividend ETF and the other one is a consumer staples ETF. So XLP paid me on June 23rd of 2023 for $19.52. Let's go on into that real quick. We can scroll on down. Right now, the price for XLP is $74 a share, and that's about 2.52% on the dividend yield. Great stuff, pretty average. That's perfectly fine with me. The companies in here are lifetime companies like Procter & Gamble, Pepsi, Coke, Costco, Altria Group, places and businesses that people generally go to for almost all their goods on a daily or weekly basis, if not monthly for sure. Target, Colgate. So not an issue there. These companies will be around for likely the rest of our lifetimes unless something drastic happens in the world or just to them in particular. So they all pay a decent dividend, and this is just the average of all those companies versus me investing into all those companies on a singular level. Me buying Coke stock, me buying Pepsi stock, me buying Procter & Gamble stock. It gets old. So I'd rather just invest into this ETF to be exposed to these companies versus trying to buy all of them in the portfolio right now, because that's just a lot of things to manage, a lot of things to look at. I just don't want to do that. So there's your gist. Either way, you're getting a solid dividend for it, and the expense ratio isn't that bad either. The last one, like I mentioned before, is SCHD, another dividend ETF. This is more of a dividend equity ETF, and also one of a fan favorite dividend ETF in the investing world. Either way, we go on in. I have about 8.7 shares, and they paid me $5.80 for my 8.7 shares. And it's sitting at about $72 per share right now. If we scroll on down, I don't have much invested into SCHD. I do plan on this being a large part of my portfolio as time goes on. I'm simply paying for other things right now, and once those things are taken care of, I can dedicate a lot more money to this portfolio and some of my other investment portfolios. And you'll see that, I would say probably throughout the rest of this year. You'll see it. It'll happen. It just takes time. Money doesn't just grow on trees, even though it kind of does. Either way, 3.73% on the dividend yield right now for SCHD. Great stuff. Solid dividend yield. Can't complain with SCHD. I've talked about them enough times in other videos, so I'm not going to burn my bridges or just talk about more here. Either way, I'm going to continuously invest into it, and that's pretty much it for the portfolio for the month of June when it comes to all my dividend payouts. That's over $160 in dividends just for the month of June of 2023. And as you guys already know, like I said, this whole dividend thing is a snowball. So they're going to continuously pay us as time goes on, and we're going to continuously grow that dividend portfolio as time goes on as well. So next June 2024, we'll probably see over $200 in dividends by all we know, or maybe even more than that, depending on how much money I put in this particular portfolio. So we'll just have to wait and see. Let me know what stocks paid you for June of 2023, and let me know if you're buying anything in particular in July of 2023 to see what we got going for that month in particular as well. So that's really all I got for this video. I'm sorry for not making content. I've been very inconsistent with making content for the past 2 months, which isn't anything to be happy about. I'm not personally happy about it, but it is what it is. Life happens. So I'm trying to get back on it. I do have other videos planned that I'm recording today, so you don't have to worry about it. I got other videos that are planned that are being recorded today. They'll probably be out within a day or two after I record them, and I want to get on the short game, man. I got to get on the shorts, so I'll be making a lot more shorts going forward as well. At least that's the plan. And yeah, let me know what you want to see. Personal finance wise, I got you covered on everything, regardless of the videos, the content, all that kind of stuff. It's coming either way. If you let me know or you don't, we'll grab some old fans, some new fans. We'll have a little fan party. I don't know, whatever you want to call it. Not only fans though. We don't do that. So yeah, I'll catch you guys in the next video. I'm out. Take care of yourselves. Stay safe. Stay peace. Wow. Stay safe. Stay positive. I'm out. Take care of yourselves. Dollar Mike. Peace. See you guys in the next video.